Well, good morning, everyone. Thomas Montgomery here. It's a beautiful Tuesday morning, September 13th, 2022. We get together with our distribution partners most weekday mornings at this time to talk strategy, share tips, techniques, but ultimately we're here to support each of you. Today's a really important training, and as you can see on the shared screen, we're going to talk about this refundable deposit, what it is, why it's important, and some options for collecting that. So let's start with clarifying that the reason that in the guaranteed financing / capital ready, those mean the same, why we collect a $2,500 deposit is that is covering the cost of developing the client's loan package, the business plan, the financial projections, and so forth, those things that are needed for business funding. And so with that being said, as a white label partner, they are expected that when they enroll a client in the guaranteed financing program, again, also called Capital Ready, that they're going to do two things up front. They're going to get that client under contract, and we've provided the contractual template. You'll find that in your white label partner Dropbox. So you'll take that template. Since the contract's going to be between the white label partner and the client, of course, the white label partner then is going to put their information in and their pricing, because white label partners get to control the pricing that their clients pay. And then also the white label partner needs to be collecting the $2,500 refundable deposit from the client. Now there's an asterisk behind it because it's important to understand that, as we mentioned a moment ago, the white label partner can either increase or reduce the deposit, and frankly, they can make it refundable or non-refundable. So the standard agreement template that's found in the white label partner Dropbox is set at $2,500, but you could change it, and it is set as refundable. So let's stop here and let's make this a little larger. So who has questions on this part? We're going to talk about what we can do if they can't pay the $2,500. Let's hold off on that for a moment. I want to make sure that we're all crystal clear on this basic overview here. So clients enrolling in the guaranteed financing program with you as a white label partner, we're promising to work with them to help them raise at least $100,000 guaranteed. We're helping them improve their financial literacy through the curriculum that we have, the 4 modules, which you're probably familiar with. And we're also building out their loan package. So this is not an advance fee loan. They are paying for the development of the loan package, and that's very common, and that is compliant in the marketplace with any regulator. So are there any questions on this part? Okay, so now let's assume you've got a client enrolled, and now we've got a problem, Houston, that they can't pay the $2,500. So what can we do about that? Because we want to help everyone. We don't want to dismiss anyone. So what are some options that we have? Well, we can help them get what we call first tranche financing, sometimes referred to as FTF, first tranche financing. So this is not a business loan. We're not ready to go get a business loan for them yet because we've not built a loan package out. Because right, the purpose of the loan package is not only to provide the materials to the lender needed for approval, it's also what we need to figure out where to go get the capital from. Because the loan package would tell us how much money they want, what they're going to use it for, and so we can understand their mitigating circumstances to figure out where to go for that funding. So first tranche financing would not be a business loan. It would be a personal loan. We work with about 40 different banks and credit unions. Some of them you've heard of, like PenFed Credit Union, others you may not have, and they address the whole spectrum of credit. So some will work with subprime, some won't, but we have a good breadth of lenders. And so we can take a client put them into our funding portal for first tranche financing. There's no hard inquiry, so they don't have to worry about that. And the typical client will receive 3 to 7 funding offers immediately, just within a minute of us putting them in. That's part of the technology that's there. And so if that's the case, if this is the direction that we're going, which we'll talk about the process here in a moment, but just so you know, we'll get the funding offers from the banks and we'll communicate that to you so then you can work with the client. It's not unusual, like I mentioned, that clients will receive multiple cash funding offers. So with that being said, they could accept one of those offers or multiple offers. So we'll communicate to you. It'll be very transparent. The client will directly receive communication from the lenders, and each lender may approve a different amount and have different repayment terms and different interest rates. What's important to understand is the first tranche of financing is not intended to meet the whole $100,000 capital raise. Really, it's meant to help the client cover the $2,500 refundable deposit. Now, with that being said, a lot of people will get approved for a lot more than $2,500. We've seen over 100,000 in first tranche financing approvals, but that's not the norm. That's not what you and I should go in expecting. What we're expecting to do is get them at least 2,500 so they can pay you, the white label partner, and then we can go implement the program and build their loan package out. But the point is, in some cases, people will get more than the 2,500. They could get 5,000, 10,000, 20,000, 30,000, 50,000. And again, on a rare occasion, they could get above 100,000 of first tranche financing. But when you're setting the client expectations here, it should be, hey, we have an option to get you your $2,500 refundable deposit financed. And we call that our first tranche financing. And client, you might get approved for more than that, but our goal right now is to get you approved for the 2,500 so you can pay me, meaning you, the white label partner, the refundable deposit. What you don't want them to do is say, oh, okay, I'll do this. And they fill out the app, which we'll talk about the process in a moment. And let's say they only get approved for 2,500. So if they get approved for 2,500, then zip, the money's wired into their account. And then you're giving them a ring and say, hey, great, you got funded. Go ahead and pay the invoice so we can go build your loan package. And they're like, what? I've already spent that 2,500. I bought a round trip ticket to the Caribbean. So that's the danger of this approach. They're getting the funding directly, and they could get a lot. They could get approved for none, depending upon their circumstances. But once they get funded, we'll let you know. You may know before us, but the bank lets us know, and we'll let you know that they've been funded. And so then you're collecting that 2,500 or whatever amount that you're setting the deposit as. Because remember, we said you can increase or reduce the refundable deposit. Now, what I've seen a number of you do is to say, hey, it's a $3,500 refundable deposit, but if you pay it up front, we'll knock $1,000 off. But if we have to go through third-party financing, then there's not a discount. So it's like a kind of a prepayment, a cash discount, but that's up to you. Okay, so this is one option of how we can help people get the $2,500 deposit to pay you. That's your money coming to you if they don't have it. Anyone have questions on number one? There's other options, and we'll get to those other options, but that's number one. Any questions on scenario number one? Charlotta asked, so it's only a soft inquiry to get the offers through the first tranche financing. So there's no hard inquiry for them to get loan offers through the first tranche financing. That's correct. Thank you, Charlotta. Okay, so I'm assuming everyone's okay with that option. So that's one option. We have other options, right? The preference is that they just pay the $2,500 up front, of course. But if they don't have the $2,500 up front, option one, we can use first tranche finance. And we'll talk about the process here in a minute. We're just not quite to that yet. That's at the bottom of the page. Okay. Option two is we can set up a payment plan for them. And so this is a payment plan. It's not third-party financing. It is set at 0%, so obviously very fair. There is a $99 application fee. The payments are a flat $100. We pull those through ACH. We just set up a new relationship with the new national bank yesterday. So we'll be running those ACHs through this new national bank. And what you do need to be aware of is the first ACH pull is immediate upon submission. And and of course, this is disclosed to them in writing, but there'll be the $99 application fee and then the first $100 payment. So if they decide to use scenario number 2, which is fine, to finance their refundable deposit, then this is going to be the payment that's pulled right away. So again, some of you are creative. Some of you say, hey, if we have to do a payment plan, it's not refundable, but if you pay up front, it is refundable. Some of you set different pricing if they pay up front versus if we have to jump through some hoops. That's up to you. You're the white label partner, you control that. Okay, so we can either use option 1, first tranche financing, which would be, of course, personal loan, because we've not built the loan package out, so no business funding yet. Or we can set up the payment plan. Payment plan will report on their credit if they don't keep current, but it's not a new trade line. It's in-house financing, and so this will not be reported to the credit with on-time payment history. Okay, so we've covered 2 options so far if they can't afford to pay for the $2,500 deposit up front to you. Option 3 is you could just work with them to set up other types of financing. Bruce is on here, and Bruce enrolled, how many was it last week, Bruce? If you don't mind putting in the Q&A, like chat box of Zoom. Bruce, did you enroll 7? I think it was 7 clients last week in the guaranteed financing. And what he does is he gets them a merchant cash advance to fund the $2,500. Yeah, Bruce confirmed 7. And so that is another option. Now, to get a merchant cash advance, they're going to have to qualify for that, but that is another option for the $2,500. And so, Bruce did 7 in a week, and that number steadily increasing. I suspect Bruce will probably hit about 50 deals, 50 by the end of this month. That's a good month. So obviously, when you can alleviate the financial pain from the client having to come up with $2,500, you'll have more enrollments. And so first tranche financing is an option. And we could even try first tranche financing. If they don't get approved for that, then we could go to the backup for the payment plan. And then there's other options like Bruce's merchant cash advance. Now, another issue is, you'll have some people that'll come to you and say, hey, I can't even afford this $99 application fee. So they're pretty much fucked, right? I mean, they have no liquidity. They're in a really bad spot. They're probably not ready to go borrow money. They need to earn some income. So if you run into someone that just says, hey, I'm stone cold broke, then what I would do, if I were you, I'd become a regional VP. We talked about that yesterday, and a number of you have, and it's free and easy to do. Then plug them in as a white label partner underneath you so they can go earn some income. Because whatever life situation, life decisions, life circumstances, if they can't afford this first $199 pull, they're in bad shape. And I'm not making light of that. I'm not trying to be funny. I'm just saying they're in bad shape, right? And so probably the best thing you could do for them at that point is to help them earn some adult income, right? So Bruce was 7 last week. 7 times 2,500, I should be able to do that math. I think that's 17,500. I mean, I know a lot of you make a lot of money, but if you could help someone make an extra $10,000 to $20,000 a week as a white label partner, and you're getting overrides from that to help them better be positioned for their capital raise, that's not a bad option, is it? Okay, so let me take a look at questions and we'll scroll on down. Oh, Kat asked a very good question, and that's my fault for not describing. So we will proceed with building the loan package regardless if they pay the $2,500 to you upfront, or we'll start right away once we get them first tranche financing. If they go in a payment plan, once they've made that initial payment, we'll get started right away. So thank you, Kat, for clarifying. So if they're doing the payment plan, her question was really simpler, is if they're doing the payment plan, do we build the loan package once they make the first payment, or do we wait until all the payments are made? And the answer is we get started right away once they've made their first payment. But just be aware, if they set up this payment plan and they renege on it, then they're going to be sued, and they're going to be sued for the principal amount owed, court costs, late fees. So you don't want people to think, oh, this is just kind of soft and fuzzy and I'll start it and maybe I won't continue with it. These are easiest to litigate because it's a clear payment plan. So, well, and it's the same here. I mean, if they go borrow $5,000 from PenFed Credit Union, are they going to need to pay PenFed Credit Union back the $5,000? Of course, these aren't gifts. So if they go get a loan, they'll need to pay for it. If they want a payment plan, they'll need to pay for it. If you use Bruce's model to get a merchant cash advance, they'll need to pay for it, right? I know that sounds kind of obvious and absurd, but some people are of the mindset, no, I don't really want to be committed to paying it just because I signed up. That doesn't float. We're going to hold them accountable. Now, granted, if you have set your agreement up as a refundable deposit, they're getting it back. But that's your choice if you're making it refundable or not. All right, so let's summarize where we're at, and then we'll talk about the process. So we're talking about options for client submission of their refundable deposit. There's a $2,500 refundable deposit due from the client when they enroll in the guaranteed financing program. You as a white label partner can make that more or less. You can make it refundable or non-refundable. That's up to you because you have the contract with the client. Ideally, they just pay you $2,500. If they don't have the $2,500, there are 4 common options. One of which is we can get them first tranche financing. I'm going to show you how we do that in just a moment. That's at the bottom of the page. Or we can set up a payment plan, and I'm going to show you that at the bottom of the page. Or you can help them get other types of financing like Bruce does. Or you can help them earn some income. Become a regional vice president if you're not already, free and easy. Plug them as a white label partner, free and easy, and they start earning income. Because if they don't have the ability to pay or participate in these other options, then the bottom line is they probably need some more earned income as a priority even before taking on debt. It's hard to borrow your way out of being broke. Okay, so any questions on these 4 different scenarios? And now I'll go into the process. Okay, so scroll down. So let's say that you have someone that wants to do the first tranche financing. That was number 1 up here. I want to make crystal clear, sure we know how it works. So in your white label Dropbox, you should find 2 different documents. You should find one that is called funding proposal application. That's what we use for the first tranche financing. So you would help them complete that. If instead what you're trying to do is get them set up on the payment plan, then you'll find a different agreement in your white label Dropbox that is called 0% interest first tranche financing packet. So these are 2 different forms. So, and if you look in there, you don't see them, let us know, email us or text us. Prefer you not call, that should be for customers, but email us or text us and say, hey, Tom, I can't find the funding proposal application, or I can't find the 0% first tranche financing packet. We can re-upload it or help you find it if the file became corrupt or whatever. No worries, we can resolve that. But you have 2 different forms, obviously. One is for scenario 1, And the second bullet is for scenario 2. So you should have those at your fingertips. If not, let us know. So what do you need to do? Real simple. Help the client complete the appropriate form. Wouldn't do both. Now, if we want to try to get first tranche financing, which is a good starting point, right? Because at that point, they could get not only 2,500, that they might get a lot more. They might get 5, 10, 15, 20, 50,000, 100,000. I think the most we've ever seen is around 127,000. But regardless, we can start with that if you want, or we can go straight for the 0%. In either case, you're going to help them complete the appropriate form. Then you're going to upload that completed form into the white label Dropbox, and you need to let us know that the client's ready to process. What does it mean process? Well, if you've provided us the app for the first tranche financing, we'll put it into our banking portal with those 40 different lenders and see what options they qualify for. And we'll let you know what they get approved for almost instantly within a minute or so. Or if they're doing the 0% interest, then we need to go set that up with the bank and do the first pull. And we've already disclosed the first pull is $199. The subsequent pulls are $100. And I say, well, how many pulls are there? Well, if they're financing $2,500 and they're making $100 payments, there's going to be 25 pulls, right? Right. Okay. Jeremy asked about the documents in the Dropbox. Yes, you can rebrand those, and that's exactly what we were talking about earlier. So when we're talking about the client agreement, the client template, for example, all the way back up here, it's in Word, so you can edit that. All right, so let's, so then you just need to let us know that the client's ready to process because you have completed with them and uploaded one of these 2 forms. I don't think I'd do both forms at once. We should do one or the other. All right, so let's hit the summary and then we'll come back and answer any questions or concerns that any of you have. So in summary, clients that enroll in the guaranteed financing program, also referred to as Capital Ready, owe you a refund, well, owe you $2,500 normally, refundable normally deposit for the development of their loan package. And so that is upfront money. They can either just pay you right out of pocket, or we have 4 different options to help them get if they don't want to or can't pay out of pocket. The 2 primary options are the first tranche financing and the 0% payment plan, of which those forms are in your white label Dropbox. Okay, so who has questions, comments, concerns on our task? All right, so Jeremy had asked about the documents being rebrandable, and the answer is yes. Thank you for that, Jeremy. Lynette's asking about the regional VP. So we rolled out the regional vice president role yesterday, and it went really well. We added, I don't know the number, less than 20 RVPs yesterday, but we're doing well with getting that leadership team put in place. No cost to be an RVP. And the goal, of course, is to have 1 per state, but that's not a hard and fast number. I know some of you want multiple states, and in some cases, multiple people wanted 1 state. But in general, the goal is to have 1 regional VP per state. There's no cost to be a regional VP. There's no minimum production, but what we know that we want to do is work with our RVPs and add at least 4 white label partners in their state per month. And if we're doing that, it's working. Obviously, the more, the better. If we're not able to add at least 4 per month, then it may not be a good fit, and we may need to replace you. But even if you become an RVP and you get replaced, any white label partners that you brought on during your term, you would continue to get that 2.5% override. So you're not going to lose income from the results that you generated, but we really need action-oriented regional VPs. And we've got a really, really strong group that's come aboard so far. And I think most of them will probably get closer to 10 added this month in the month of September. So ultimately, our growth should be nice if there's 50 states, ignoring Puerto Rico and other territories. If we have 50 states and if we can average 10 new white label partners per month, which isn't a mandate or a requirement, but I think that's probably what our productive RVPs will generate, we'll be adding about 500 white label partners a month. And that's really what we'd like to see. There's going to be a little ramp up time. Okay, so there is that for Lynette's question. And Lon's asking, yeah, so for all of you that are white label partners, we've signed and executed a white label license agreement, and that should have been sent to you via Adobe. After you sign that, we should have set you up with your Dropbox. Again, if you don't see that, let us know so we can problem solve and get that fixed. And then in the white label license agreement, there's no cost to become a white label partner. At the back of the agreement are the schedules for the 3 main campaigns, the capital campaign, the business startup, and the SBA Express. So if you have questions on those specifics, Lon or others, just be sure to go back and be familiar with the white label partner agreement that we're working under. Okay, so let's stop and ask, was this helpful? And it's okay if you say no, but was this helpful, what we discussed today, for different options to help people with a refundable deposit? Yes, no? And then I guess what David's pointing out is the fact what he really likes is that everyone can participate. So even if they're in a difficult economic position, maybe they don't have the 2,500, that's okay. Maybe they're in such a position that we can't even get them first tranche financing. That's okay. That doesn't mean that we're not going to help them. Then we can at least set them up on a payment plan. Let's say that they're in a real tight position. They frankly can't even afford the payment plan. Well, then we can look at other types of financing, such as a merchant cash advance, which is not something we'd normally do, but maybe for this purpose it would work. But the fail safe that you and I have is if they just have underlying liquidity issues, fine, let's help them earn some income, right? Because white label partners earn on average gross income, granted, $12,500 for each client that they bring in. And of that, you're getting a $2,500 override. So as an RVP, I mean, this is golden. You would love to work with broke people, right? Because if they can't do anything else, then get them underneath you as a white label partner. They generate income. They're helping clients, of course. And now you're getting overrides, right? So you can't lose. Either you're getting money up front from one of these mechanisms, or you're getting overrides and you're solving their core problem. Because again, it's very difficult to become unbroke with debt. It's hard to borrow money when you're broke, right? Because you don't look liquid. And now we've got some strategies, and we've talked about those, how to make people look better on paper in terms of liquidity and collateral and all of that. But some people just need some extra earned income. I would suspect that probably 1 out of 4 of your prospects should become a white label partner underneath you. They go out, they earn some income. They should be able to earn around 100,000 of gross income a month, and you're making about 20,000 in overrides per white label partner. Again, assuming that they're helping 8 clients a month. So is that get rich quick? No. Is this MLM? No, you don't have to buy anything. There's no buy-in. There's no required production. Is this Ponzi? Of course not. It's not redistributing prior people's money. But this is a great opportunity to help people get their loan package built, which is what we need to do to go get business funding. And what we've been discussing today are some options we have to help them cover that if they don't have the funds themselves. All right, so let's see what other questions you have before we wrap up. Thanks for all the positive comments. Dawood asks, can the financing be used for the other programs? Yeah, so when they, let's say that they go for first tranche financing and they get a one or more cash offers, and they can what we call stack these. And these are not credit cards, by the way. We are not talking about credit cards here. These are lines of credit and or term loans, just to be clear. But most clients will get multiple offers and they can accept multiple offers. So yes, once they've covered what they owe you, the $2,500, then on top of that, yeah, that's working capital for them. And so that's very valuable for some of our clients. And so some of our clients will use the first tranche financing to have the funds. Let's say that they're light on collateral. So they want to buy the collateral support program. Well, you know, Dawood, that you can help them get set up on the collateral support program, and you make $5,000 for doing that. But you say, well, the problem is they don't have the money to buy the collateral support program. Well, the first tranche financing could be that. Some of you are insurance agents and you want to get them set up on a key person policy, but they don't have the money, because you always want to try to get annualized premiums from them, right? So if they don't have the money, then maybe that could come out of the first tranche financing. So that's exactly right. This could create additional working capital. My word of caution to you, though, is approach them with, hey, we can help you get financing for the refundable deposit through our first tranche financing. And you may, in fact, even get offers above the $2,500 that would give you some initial working capital. What you don't want them to think is, oh, by going after this first tranche finance, and we get lots and lots of money, and all of a sudden they forget about paying you what they owe you, which is the purpose. That's the primary purpose of first tranche financing. All right. Anyone else have any questions, comments, concerns that I can help with today? We've covered this. I think it's pretty clear. I'll get the recording out to all of you that are white label partners and or regional vice president, so we convert this into YouTube and I'll get it out to you today. Anyone have any questions, comments, concerns? All right. Well, thanks everyone. Have a great day. We'll see you back tomorrow morning. Bye-bye.